Today, we're digging into something called a flex loan. It promises to be a quick fix when you're in a financial jam. But the big question is it a lifesaver or is it a trap?
You know the feeling, right? The car suddenly dies, a pipe bursts in the house, or you get a medical bill that just, wow. It's that heart-dropping moment where you need cash and you need it yesterday. I think we've all been there.
And when that pressure hits, you're not thinking about next month. You're thinking about right now. You just need a fix, something immediate. And that's exactly where certain financial products are waiting to be the hero of the day.
And that brings us right to the main event, the flex loan. It shows up looking like that simple, easy solution you've been searching for.
So, what is it exactly? Well, think of it less like a traditional loan and more like a credit card for cash. You get approved for a credit limit, and you can pull money from it whenever you need to. And the best part, it's usually unsecured, which means you don't have to put up your car or your house to get it. The whole process looks incredibly simple. Step 1, you get approved. Step 2, you take the cash you need. Step 3, you just make these small, minimum monthly payments. On the surface, it sounds almost too good to be true, doesn't it?
Okay, so let's talk about the appeal. Why would someone go for a flex loan? What makes it look like such a great idea, especially when you're stressed and in a hurry?
Well, it really all comes down to two things, speed and access. We're talking about applying and sometimes getting money on the very same day. A lot of lenders don't even do a hard credit check, which is a huge deal if you have bad credit or almost no credit history. For a lot of people who can't get a normal loan, this looks like the only door that's open. And that term, flexible repayment, that sounds pretty great too.
But, there's always a catch. Every quick fix has a trade-off. And this is where we need to look behind the curtain, because that easy path you start on can get very, very steep and very expensive.
And there it is. That one number changes everything. The APR, or annual percentage rate, is the total cost of borrowing money. And with some flex loans, that cost can be astronomical. We're talking triple digits, up to 250%, or sometimes even higher. To really understand how massive that is, just look at the comparison. Your typical credit card might max out around 25%. A personal loan from a bank, maybe 36% on the high end. A flex loan at 250% isn't even in the same ballpark. It's in a completely different universe. That right there is the price you pay for speed. And that insane APR is just the beginning. You've also got to watch out for fees, flat fees, ongoing fees, late fees, you name it. But here's the real danger. Those small minimum payments, they're often designed to barely cover the interest. That means your balance, the actual money you owe, hardly goes down. In fact, it can even grow over time, even if you're making every payment. It's a treadmill you can't get off of.
As one source puts it plainly, if you only make those minimum payments, your debt can grow a lot. This is what's known as a debt spiral. That one feature that seems so helpful, the low payment, is actually the gear in the trap that keeps you stuck.
So what do? You're at a crossroads. You need money fast, but that quick path is full of holes. Let's take a quick look at some of the other roads you could take. When you lay it all out like this, the trade-offs are pretty clear. A personal loan is way cheaper, but it's slower and you need better credit. A payday loan is also fast, but often it's even more of a trap. And yeah, borrowing from family might seem free, but that comes with a whole different kind of risk to your relationships. This is that moment where you have to take a deep breath and just pause. Before you sign on any dotted line, you have to ask yourself some really honest questions. Be real with yourself. Can you actually pay this thing off super fast to avoid that crazy interest? Have you really truly looked at every other possible option? Do you get all the fees, not just the big print? And most important of all, what is your escape plan? How are you going to get out of this debt for good?
So let's bring it all home. After walking through the easy sales pitch, the hidden dangers, and the other options, what's the bottom line here?
It really just boils down to this one simple, powerful trade-off. You are buying immediate convenience, and you are paying for it with a potentially massive long-term cost. It's a tool, for sure, but it's for a very specific, very short-term emergency, not a long-term plan. And that leaves us with the final crucial question. It's not about whether these loans are good or bad. It's about you. For your specific situation, right now, is that burst of speed truly worth the incredible risk you're taking on? Only you can answer that.